So, friends, let's begin. Before we invite our speaker today, just about the season 6. So we started the season 1 in sometime in the month of Feb, which was on retirement planning. Let me stop sharing the screen, Nanda, for a while.
Sorry,
So,
I'm just trying to.
Okay, you want to just see that?
Yeah, sorry about that, but I'm just trying to get this sorted. All right,
Yeah.
sorry.
Thanks. So with the season 6, the season 1 was on retirement planning, season 2 was on confidence, season 3 was on presentation skill sometime in April, and then in the month of May we had international practice management, and then we had season 5 on wellness, which was physical wellness, mind wellness, and season 6 is on digital interface. So now today is the last session in this series of season 6, which is a digital interface, but internationally. I think the way international stocks or people are talking about cryptocurrencies and ETFs in cryptocurrencies, things are becoming very, very important. And the way we all are using these stocks every day, starting from a Apple or a Samsung phone to maybe each and every product which we are using from morning till night, that itself is an international stock. So I think we are not, it's not like you cannot be just out of all this. So I think a person who himself has a huge experience and of managing and understandings. So Mr. Vikas Nanda will be speaking to us, and I will request his colleague Dipankar Kaushal to introduce, tell something about Mr. Vikas Nanda before he starts, and then we can all understand. We'll keep this session interactive. By the time a few more of our friends will join. So looking forward to learn from you, Mr. Vikas. Over to you, Dipankar.
Thank you.
Okay, extend a very warm welcome to all of you. And, the speaker for today is none other than our co-founder and chairman, Mr. Vikas Nanda. He has rich experience in financial services industry, more than 30 years of experience. He's worked with Deutsche Bank for more than 2 decades, has worked in India, Singapore, and London as MD at Deutsche Bank and Executive Vice President at IBM. He is an IIM Ahmedabad alumnus. And, Vikas, I would love if you could just share the thought process, how Globalise came into inception.
Sure, Dipankar. Thank you so much. Thank you, Kanak, for the warm welcome. I was listening to all the topics you've covered in the master classes so far, and after wellness, we are in a dry subject like finance. But hopefully, with all of the things which are happening in the international markets, this can be interesting, and we'll keep it interactive as well. So let me just start by sharing my screen. Just to confirm, is my screen visible?
Yes, Vikas, can see.
All right. So I'll just give you a brief introduction about the platform and about myself. We will then talk about the global equity markets, why that makes sense. What are the various factors or reasons why people should look at international equity markets from a portfolio perspective. We will then talk about also from a mutual fund distribution perspective, how does that fit into the scheme of things, and how could all of you think about that from a client perspective? What are the possibilities over there? We'll run through a small demo as well so you can practically see how easy it is. And as part of that, we will address any questions which come up. Just to give Dipankar spoke about what I've done from a professional perspective, but I'll just share a personal aspect of this as well. I've spent a lot of my time in India. I started working in Mumbai. I worked out of Singapore and Vietnam. I was then working out of Bangalore for many years. I've been based out of London for the last 10 years now. And during all this while, I've been, of course, a significant investor in India. In fact, I would say it is about 5 years ago, I was fully concentrated in the markets in India. And for a simple reason that, looking at GDP growth rates in India, which are 6 to 8%, looking at all the good demographic factors about young population, emerging middle class, India is a very strong growth story. And my initial belief was that if one is investing in India at these kind of GDP growth rates, one is comfortable with country risk. Why look at markets in the US and UK? And even though I spent all the years initially in Singapore, and then even I would say the first 5 years in London, I was putting all the money back into India. It then so happened that I had a pool of money which I had to invest in the overseas markets. And about 4 or 5 years ago, I then took the time, I studied the markets for about a year, put some money to work, and saw the outcome, put some more money to work. And over a couple of years, realized that the hypothesis of thinking that India growing at 6 to 8% versus, let's say, US growing at 1 to 2% means that stock market returns in India will be better. That hypothesis was incorrect because my stock market returns or my portfolio returns in the US markets were much better than the returns I was getting out of India. And the reasons for that now, as we research and as we look at it, and I'll share some of that data in the deck with you, is in some ways quite clear. And I'll just call out 2 main factors which will highlight that. One is, if you look back, when it comes to innovation, and whether that is innovation from a technology perspective, or whether that is innovation from a product perspective, fundamental innovation is still happening in the developed markets. Now, whether you think about the problems the world has to solve, whether that's from a clean energy, from a biotechnology perspective, electric vehicles, artificial intelligence, cloud computing, all of the R&D and the products are coming out of the US and some of the other European markets. You think about products, whether that's a sharing economy, the Airbnb, the Ubers of the world. You think about new payment mechanisms. One of the latest trends around, the move away from, let's say, credit cards into other kind of payment mechanisms. All of those innovations, again, happening in the US, European markets. So both in terms of technology or underlying product innovation, that's happening in those markets. And with innovation comes wealth creation. So that's one part of it. The second aspect of this is that these companies, and as Kanakji said, today we are having this call on Zoom. Between us, we are probably using HP, Apple, Lenovo, Samsung laptops. We are probably on an Apple or Android phone. We are probably wearing clothes of an international brand. So, our day-to-day lives are dominated by international brands. And these brands, therefore, are growing not only because the US is growing, these brands are also growing because India is growing and China is growing and Asia is growing. So again, coming back to the basic hypothesis of GDP growth rates, the fact is that these companies also grow because India grows and Asia grows and China grows. So innovation and market, both these factors, when you look at it, these international companies have a fantastic run. which leads to the fact that, when you look at how they grow from a market cap perspective, there is healthy growth, which is to some extent, or to a fundamental extent, was the genesis for Globalise, because the question then was, given that situation, how do we enable people in India to invest in the international markets, to take direct exposure, to be able to invest in these early themes? And as Kanak again said about crypto as well, we'll talk a little bit about that as well. So with that context, what we did was we set up Globalise. Globalise gives access to international investing to Indian residents. So one of the issues was people typically needed a US address or a US passport or a SSN number, no longer necessary. You can open an international brokerage account in the US with a Indian Aadhaar card and a PAN card. It's a completely digital process, and that also dwells into the theme around digital, and we'll talk about how the entire thing, there's no paper in the entire process. Everything is online and digital. More importantly, there was also a belief that when people are investing, they need hand-holding, and the advisors and the distributors play a very, very important role in how people are investing. So the platform is built from a distribution perspective, and we'll talk about more details on that, on how, as a distributor, there's the entire technology for you to onboard a customer, for you to be able to initiate customer trades, and for you to be able to actually manage and monitor the entire platform. And as part of that AUM, there's a revenue model as well. The platform, was co-founded by me and by Viraj, who is an alumnus of UCLA, also ex-Deutsche Bank. We are a very strong team. Our CTO is Sridhar Kakarala. He was ex-JP Morgan. He was also CTO of Carby FinTech for about 8 years. So very strong person from an industry perspective in technology. Ram, who heads up our investment products and research, again, US certified, 15 plus years experience on the investment side, international fund manager with Thomas White, which is a boutique US investment firm, asset manager. And Mukesh, who's based in the US, is ex-Unilever, ex-Deutsche Bank. He was treasurer of Unilever in India. He's a CFO in the US. So again, a very strong team to help build this. So this was just a quick introduction about myself and about the company. What I will do next is to talk a little bit more about global equities and why global equities, and I'll share some data with you. So what you see on the screen is data as of 31st of October 2021. And while, sorry, let me just put this on silent. While the India markets have done very well, what you will see is that the US markets have done even better. And the data shows their returns in the US market from an S&P perspective versus the S&P 500 versus the Sensex here. And these are rupee returns. So what you will also see is there is a benefit coming not just from higher returns, but also from dollar appreciation or rupee depreciation. So I think that's one part of it. You look back at 10-year data, it's the same thing you will see. The other useful thing also is that from a risk perspective, and risk in terms of volatility, the US markets are much less volatile than the markets in India. So by having part of the portfolio in the US markets, what we're able to achieve is improved returns at lower risk. So from an overall portfolio optimization perspective, that's a fantastic outcome. Under Reserve Bank of India regulations, every Indian is allowed to send $250,000 overseas per year, which means that if it's a family of 4 people, they can send $1 million out. So there's a lot of headroom in terms of the possibility for your customers to invest. And the fact remains that, relatively speaking, the Indian equity markets is still a small part of global markets. So just being concentrated in India, besides the return aspect of it, versus having some part of investments in other markets, even just makes sense from a diversification perspective. We, in terms of wealth creation, we spoke about the fact that we have global companies based out of the US markets. I alluded to the fact that a lot of the themes which we talk about are, the basic R&D is happening in those markets. And what this allows us to do is not only have our clients diversify the portfolios, generate improved returns, and a better opportunity from a wealth creation perspective. But there are also a number of use cases where people actually need money overseas. They often need money overseas for children's education. There are people who want to buy real estate overseas. There are people who are planning to emigrate. So you'll find there are a number of areas where it is important for people to start having a dollar corpus overseas and use this SRS limit to build a dollar corpus overseas. There is another interesting use case which we are finding is, and we're having a number of clients moving to the platform, is there will be clients you have who are working in international companies in India. A number of them will have stock options. These stock options will vest. And once they vest, when people sell the vested options, the money typically will come back to India. But what the clients are looking for is, I've got some part of my investments overseas. When I sell my vested options, which from a diversification perspective, again, makes sense. And the reason we say that is, I was just talking to a client yesterday, works in a US digital healthcare analytics company, has vested options for about $1.5 million. And his concern is that I have $1.5 million in my company's stock, which is my wealth. I'm also working in the company, so my monthly compensation is coming from there. If something happens to the company, both my income and my wealth gets impacted. So I would like to, diversify some of my wealth into alternative assets from a risk perspective. And again, the opportunity what this creates is for people to move the vested options into a brokerage platform where they can sell and diversify into other assets. So there are a number of use cases where people either want to build a corpus overseas or have a corpus overseas, which they need to diversify. And finally, the US market from transparency and from a governance perspective is top class. And there is a lot of focus in terms of, from a client perspective, from a client protection perspective. All the accounts which are there, which are offered by Globalise, are US SEC regulated accounts. And each account offers a protection of $500,000. So there's a significant amount of security in terms of the investment process. What we are also seeing is, last year, you see some numbers here, which are slightly depressed or quite depressed due to COVID. But there is an increasing trend where people are investing overseas. There's an increasing trend where people are going abroad for studies overseas. And also there's an increasing trend for travel and other expenses overseas. So there is this movement where people are increasingly looking at the international aspect of their expenses and travel. So there is therefore this underlying need which we can fulfill from an investment perspective. So looking at both of these, aspects, and from here thinking about, okay, how do we enable people to invest directly in the international markets? give them access to all of these interesting themes which we're talking about, give them access to the option of buying into specific brands which they're keen. But at the same time, how do we make this possible for our as advisors, as distributors, to make this possible? That's some of the things I'm going to cover in the next few slides. So Globalise as a platform, as I was saying, is purpose-built for from a distribution perspective. And what this allows you to do is have the access and the technology to onboard customers, but also get access to all the research which we have, because I think one of the key things then becomes is, if you're going to advise customers on international investing, how do we build up our own knowledge on that? How do we get information on that? So a lot of our focus also is, how do we share research with you? We do that via monthly forums. We do that with research on the platform. We do that with research with specific portfolios. We do that with research in terms of allocation tools. So we talk about a few of those topics as well. But Globalise is the only platform which is specifically focused on saying, how can a distributor in India help their clients invest in the international markets? What the customers get is a completely digital experience. It takes about 5 minutes to open their account, put in their personal information, add in their PAN and Aadhaar card, and it takes sometimes a matter of minutes. But intraday, KYC gets done in the US, and they're able to then start transferring funds and start the trading process. They get both the equivalent of a demat account and a cash account on the brokerage platform, so they can see both of that. Customers get access to direct access to the NYSE and the NASDAQ markets. Over 5,500 stocks, close to now 6,000 securities on the platform, which includes stocks, ETFs, ADRs. And it's of course fully digital and secure. From a research perspective, in addition to portfolios and thematic investments, we also do research on the entire gamut of ETFs available in the US markets. And we publish recommended list of funds by asset class and also by sectors. So again, where people are, we've had, specifically speaking, interest in people saying, I want to invest in, so the customers came back saying, I want to invest in cannabis. It's legal. We think it's a great area. Can you help us do that? We want to invest in, especially in the gaming sector. Can you help us understand what are the best investments in the gaming sector? There's been a lot of interest in crypto. Initially, we had some funds on the platform which were investing in underlying crypto assets. And what I mean by underlying crypto assets is where these were companies involved in the crypto industry, exchanges, etc. And now we've had the first crypto ETF got launched. This was, I think, about 2 or 3 weeks ago, BITO, which is investing directly in cryptos through the futures market. So we made that available as well on the platform. So again, we keep track of what are the trends, what are the kind of themes people are interested in, and we make sure those securities are available on the platform. One of the very interesting things we have done is to help people invest is to create portfolios. And portfolios are both goal-based and thematic. There's a lot of research which goes into the portfolios to construct these portfolios. We monitor them, we manage, we rebalance them. So From an investment perspective, it's a one-click investment, which allows investment in the theme and therefore the entire set of underlying companies. I think what is also interesting is that you could almost think of so if you look at the Globe, the curated portfolio, this has an AUM fee which we charge to the client, and a significant part of this fee is then passed on to you as distributors. So there's a very interesting revenue model as people invest money in the US markets, invest in these Globes, and we'll talk about a few of these. That also then creates a revenue model for all of you as well. From a digital perspective, and we'll run you through a demo on this. From a digital perspective, not only is there this entire client portal and a client application, a mobile application, there's also the advisor portal, and there's an advisor mobile application as well. What the advisor technology allows you to do, which is the distributor platform, is on a real-time basis, it allows you to onboard a client, prefill the KYC. The client just has to then authorize that. You can look at the client portfolio. You can recommend trades. The client doesn't even have to log into the system. They can authorize these trades through a simple OTP process. And also, you are kept informed about every client activity. And what I mean by that is the client adds funds to their account, you get notified. The client sells or buys anything, you get notified. The client approves a trade you have recommended, you get notified. So there's also the entire notification system, both via email and in-app notifications. And where you have a larger team and you have RMs, the platform also has the ability to set up that entire relationship management hierarchy, so that an RM can only see their clients. So you can, manage all of that, and then the reporting and risk management around that. This is, what the dashboard looks like. We'll actually show this to you on the actual demo. So I would just maybe quickly summarize. Global investing is fundamentally something very, very sound in terms of diversification, in terms of wealth generation, in terms of both risk and return optimization. There's a genuine need for that from a client perspective, because besides diversification, a lot of people actually have the need to have a dollar corpus for various aspects which we discussed. From a distribution perspective, from an MFT perspective, from our advisor perspective, it is now possible for you to offer that to your clients. It allows you to attract new clients and new AUM. And maybe I'll give you the example around this stock vestings. Another very strong use case which has come up with us, especially where partners have NRI customers, typically we have now close to 80 plus partners on the platform. They have been managing only the India side of the portfolio of the NRI clients. What this now does is, you've got a client in Dubai, you've got a client in Singapore. They have money lying in dollars over there. Even those dollars you can bring in as part of your AUM, because those dollars can be transferred to the Globalise platform. It then becomes part of your overall AUM, because as they start investing those on the Globalise platform, you begin to earn revenues on that as well. Your revenue streams come from account opening fees, or we have an annual subscription fees. You get half of that. Any trading the client does on the platform, you get a share of that. And then any investment the client does on the Globes, there's AUM fees, and you get a major share of that. So this was a quick introduction in terms of global investing, how you can participate in that for your clients. So I'll just pause now and see if there are any questions before we get into a demo, because I think some amount of interaction and question, if they are at this point, that could be useful.
Very interesting, Vikas. If you can also talk about some ETFs which are there, where you have some stocks, or like is mutual money, can we people also buy mutual funds there, and also about cryptocurrencies ETF?
So what we'll do is, Kanak, when we get into the demo, we'll actually show what's available on the platform, and we'll walk through some of those constructs.
And what is the revenue model, if I could understand?
So the revenue model is that we charge 1.25% AUM fees on the portfolios, and substantial part of that fees is then passed on to US trail fees, as a distributor. Even where people are investing in direct equities, there is a brokerage fee. It's 2.5 cents per share. So out of that, 0.75 cents gets passed on to every distributor. Where people, there's an annual subscription fee. If people want to trade very frequently, that's 5,000 rupees. If somebody has a subscription signed up, 50% of that subscription fee comes back to you as a distributor. So subscription fees, trading fees, and AUM fees, all of these which are generated from the client, that comes back to you. Major share of that comes back to you.
What I understand, like the way in India we have these broking firms like Motilal Oswal or Kotak Securities and things like that. The way they actually share their revenue with each transaction or whatever it is, the similar way you are doing that.
That's right, yes.
And how about the security of this? Like, where is the demat account? Like, usually, let's say if somebody is having an account with Motilal Oswal or Kotak Securities, they have a demat account with them. Other than that, also there are some government bodies, where you can hold the dematted shares, and then there is NSDL and CSDL. How things operate here, and if something we can understand.
Sure. I think that's a very important question. So the way things work in the US market is the broker provides both the cash and the securities account. The securities are in turn kept with a custodian, and the cash is in turn kept with a bank in dedicated or specific client segregated accounts. So the brokerage we use in the US is a company called Drivewell. That is a US SEC registered broker. Is the same broker which is being used by, for example, HDFC Bank or Axis Bank in India. The securities, the custodian is custodies with Citibank and Velox Clearing in the US. And as far as the cash is concerned, the cash is with JP Morgan and M&T Bank. We will fully move to JP Morgan by end of December. And then from a cash movement perspective, whenever anybody's transferring money, you basically send the money from your bank account in India to the US bank account, and it goes into your account at the brokerage. So that's how the fund flows. And again, when the securities are bought, they come straight from the exchanges into your specific account at the brokerage. The account is a fully regulated US brokerage account, which means that every account has all of the US protections, which is the SIPC protection for $500,000 on every account, including $250,000 in cash as well. So both from a regulation perspective, fully regulated, fully secure and protected from a US government perspective, and also in terms of the underlying institutions where your cash and securities are held. These are top class institutions. If you look at the SEC FINRA broker check, you can look up at Drive Wealth. It's a top class brokerage, very well reputed as well.
Is there a while you are selling the stocks, let's say you purchased 100, let's say any company, IBM stocks, and then when you are selling 100 IBM stocks. So while you are buying, you are paying the brokerage. While you sell, also you paid the brokerage, and you get a share of both. Am I right?
That's right. Yeah. So it's 2.5 cents per share when you buy, 2.5 cents per share when you sell. So both buy and sell, you get the brokerage.
It's a percentage or 2.5.
It's a flat fee per share.
Okay. If it's a high value stock, then also 2.5 cents. If it's a low value.
Correct. So that's how it is. It works.
In India, usually we understand 0.5% or 20 paisa, 10 paisa, 30 paisa, like that, or maybe 1%.
Correct.
Like
so I think brokerage is increasingly moving to a flat fee model. I think the way the Zerodhas of the world or the Charles Schwab of the world, they've kind of begun to move to a flat fee model versus a percentage-based model. So that's how it's set up at the moment, which is to be progressive in terms of how charges are working towards. The interesting thing is in the US market, it is also possible to buy fractional shares. So let's say Google stock is $3,000, but you can buy a Google share for $500, and you'll get some part of a Google share. So again, for your customers, if they put in $5,000 and they want to buy some Google, some Apple, some Tesla, some Facebook, it is still possible because fractional share purchase is possible.
More or less clear. I think if you can just show any other questions, friends, we can ask. Otherwise, let's look at the demo where we can see how stocks can be purchased and sold, and how ETFs work, and how cryptocurrencies ETFs work. So these are the three things majorly we will be interested to see.
And how does you have a sub-broker model also, right? If I understand.
Yes. That's what they are telling.
Yes,
does that work?
So basically how that works is you sign up to the platform and there's an account created for you on our platform, which allows you then to onboard your customers onto the platform, get their KYC done, get their account opened. And then as they put money on the platform and as they trade on the platform, you start earning revenues.
I'll just add to that.
Thank you.
Actually, what happens? You receive one link, okay, which I think Dipankar can share in the chat box. So once you receive that link, you can just register yourself as a broker, as a sub-broker. Now, after that, they will be sharing another link with you, where that link is connected with your code, and once you share it with your investors, you can onboard them. And once a customer is onboarded, they can buy stocks. And whatever is happening, you have all the control. You can see everything, which investor is buying what and all everything. Am I right, Mr. Nanda?
Absolutely right. Dipankar, maybe very quickly you could do the demo. But as correctly said, you get a link, you use that to sign up. That creates your account on the platform. Completely digital, take you maybe a few minutes to do that. And then once you are signed up on the platform, you will get a custom link which is customized for you, which when your customers use that to sign up, they automatically get assigned to you, or you can actually open their accounts and then they're assigned to you, and they're assigned to you for life. So thereafter, once a customer opens their account on our platform and they're assigned to you, whatever lifetime revenues which are there on that customer will always come to you.
Sure, Mr. Vikas, and I'll share the link in a few minutes. We'll go through the demo and then I'll share the link with all of you. Using that link, you can set up your advisor account. And once you've done that, we'll take you through a detailed training session. So with that, I'll just share my screen and show you the demo of the platform. Is my screen visible?
Yes,
Yes.
yes.
All right. So, I'll start with the advisor module. So customer get one module, advisors get one module. Customers can, if they want to invest into a security or buy a model portfolio, they can do it themselves. They can see their portfolio themselves. You as an advisor can also initiate a trade for the customer, see their portfolio. So all the functionalities that are there on the customer module are also there on the advisor module. So with that, this is how the advisor module looks like. Under client list, so let me first start with the products that are available on the platform. Customers can invest into direct shares. There are close to 4,400, more than 4,400 shares available on the platform. Customers can invest into that. There are more than 1,400 ETFs available on the platform. Customers can also invest into ETFs, and we would be investing into one of the crypto-based ETFs as Kanak sir has requested. Then here there's an interesting product that you see is globes. So normally what we have seen initially, customers would invest into some of the fancy names. They would invest into some of the ETFs, and then they gradually start investing into these model portfolios. These are basically goal-based and theme-based portfolios. Single-click investing, we do the research, we do the monitoring, rebalancing, everything is done by us. So these are the different products available for customers to invest into. Now, let's go ahead and invest into, let's say, a crypto ETF. So I'll click on ETFs. So this is where I'm initiating a trade from the advisor module, the module that you will get once you partner with Globalise. Customer can also follow the same process himself from his customer module. I'll also, if time allows, I'll also, spend a few minutes on customer module. ProShares Bitcoin Strategy ETF. I'll just click on this ETF. This is where I see the basic information: previous close, open, last trade, 10-day moving average volume, expense ratio. All of this information is visible here. If one wants to see the performance of the ETF, one can click on performance and see the performance of the ETF. One can select a date range, or there's a prefixed date range, let's say 1 month, 3 month. One can basically see the performance basis that. Information would be the basic information as to where the ETF invests, the structure of the ETF. And news is the section where one would find the latest news with respect to the Bitcoin ETF. Investing is a straightforward process. You see this green button here. I, as an advisor or partner, would click on invest. I'll search for my client, let's say customer 1, select. One can place a market order, limit order, or stop order. Let me place market order for now. So, it's Saturday today, markets would be closed, the order would get queued, and Monday, 8 p.m. Indian time, the order would get executed. So let's say, and buy price is $37. And by the virtue of fractional investing, as Vikas sir had pointed out, I can really think in terms of value. Let's say I want to invest $100 into this ETF. I'll put 100. I'll click on review order. And the equivalent number of units would be allotted to me. As in this case, you can see 2.7 up to 8 decimal places. So for really expensive shares like in Amazon or Google, if a customer wants to invest, let's say 100, 200, $500,000, he has an option of doing it. I'll click on submit for approval. It says the order has been submitted for client approval. Now we'll move to the client email ID to basically approve this order using an OTP. But before we do that, let's see the status of this order on the advisor dashboard. So I'll move to the dashboard again. You see this option called authorizations here. I'll click on authorization. Under authorizations, as you can see, this is pending approval. As the customer approves this order, the status changes to order approved. So I'll quickly log into the customer email. Customer. Gmail. So normally, you know,
Is this the Dipankar, is this the right customer? Just check the email.
Yeah, I'll sure. So, you know, I think I've come to the wrong email. Normally, you know, just for the purpose of understanding, I'll show you the email that customer receives. So customer receives an email like this. You have a new order. Your advisor has initiated an order for you, the order details, and then customer clicks on approve order. Once he clicks on approve order, he receives an OTP and approves it using an OTP, and the order gets placed.
Dipankar, just go back to the advisor screen.
Sure. Yeah.
Yeah, just click through. Just check the customer email.
Mm-hmm.
Just go into the client list.
No, I know the customer email, Vikas sir, but
Okay.
for some reason, this is the email. And as I click on this email, the wrong email is getting opened. That is, you know.
We're not able to get into that email ID.
Yeah, that's the problem.
Okay. Just go into the G on top. For people on the call, sorry about this. And is that the right email?
Yeah.
Okay.
So
All
anyway, I'll just, so, you know, customer approves the email using an approve the order using an OTP, and the status changes to order approved. So, you know, you can initiate a trade in common stocks, you can initiate a trade in ETFs, you can also initiate a trade in model portfolios. Then, you know, there's a whole option for you to see your list of customers and their portfolio. So, you know, I'll click on client list. I'll search for the client. Let's say customer 1, test 1, search. I'll click on the client, and basically I would be able to see all the screens that customer has access to. So, you know, here on the dashboard, I see the stock value, cash value, portfolio details, portfolio value, stock value, cash value, instrument details. And, you know, if, for example, I want to buy or sell more of Adobe for my customer, I have an option of doing that. I can see the portfolio analytics, you know, the overall portfolio performance, the sector allocation. So, you know, all that visibility and capability is there on the platform. You can see customers' order history, you know, past orders, pending orders, all this information is visible here. You can see their transaction history. You can generate, you know, tax report, monthly statement report. So all So, basically, you would be able to guide your customers at every step of their journey. Then, there's an option of creating a customer account. You can create a customer account, and like when we place a trade, customer approves an order. Similarly, you create a customer account, which is just a 5 minutes process, and customer just has to set his password and approve the details you've filled. Then, there's an option of creating an RM on the platform. You can create an RM account. You can map the clients to the RM. RM then gets his own access, sees the clients that you have mapped to him, and basically manage the clients. So, this is the basic overview of the advisor module. As you all complete the sign-up process, you will get a module like this to basically manage your clients. Opening a customer account, you can open a customer account, or, there's a custom sign-up link that I will be sharing with each one of you. Using that link, you can basically share that link with your customers. All the customers who sign up using that link, they would be shown here under your client list. So, this is the advisor module. Your clients also get a module. So I'll just spend maybe 2 or 3 minutes on the client module as well.
Dibang, I was just thinking, let's just check whether there are any questions so far on the advisor module.
Sure.
Any questions from people in terms of Dipang, if you just go back into the advisor module, just click into shares, just maybe while we're looking at it, search for shares, put through an order.
Sure.
The I think the good thing about the platform is that the platform is set up that you can maybe Dipankar, while we're doing this Q&A,
Sure.
could you stop sharing your screen?
Yeah.
Just easier to see if people are. Yeah, thank you. So the good thing about this is that the way the platform is set up, it allows for trading to happen also while the US markets are closed, i.e. you can book your trades and the trades will get placed in the market as soon as the market opens. So therefore is, given just the time zone difference, US markets start 9:30 a.m. Eastern time, which these days is 8 p.m. India time, which is normally quite late. So, you can place the orders during India daytime as well, and the orders will then get placed as soon as the markets open. So any questions so far in terms of the investment process or in terms of products?
Yeah, I have one question, sir. Hello.
Yes, please. Yes, please.
So once client onboarded, no? So how payment gateway will be approved?
Oh, okay. Actually, that's a very, very useful question. So I'm glad you asked that. So like I was mentioned that every individual can transfer up to $250,000 overseas per year. That's from a Reserve Bank of India perspective. The transfer happens through the banking system. We have tie-ups with the following: ICICI, HDFC, Kotak, Axis, IndusInd, and IDFC First. These 6 banks have online capability up to $25,000 per transaction to transfer the money overseas. So as soon as the customer account is opened, there's an add money functionality on the platform. They're going to add money. They choose which bank they bank with in India, and they will then get the specific instructions and the online banking link. So let's say if your account is with the ICICI Bank, you click through, you get into ICICI net banking, you put in your login details over there, and you get some specific instruction on how to set up the beneficiary and transfer the money. Typically, if you are initiating the instructions at a bank during India hours, let's say by about, I would say probably by about 1 p.m. or so India time, you will see the money in your account normally by end of day, same day. If it's after that, you will see the money in your US account the next day. So that is how the money transfer happens.
Yeah. Thank you so much.
For other banks, we have another 6 or 8 banks where we have, including some of the foreign banks like Citibank and Deutsche Bank, and other banks as well. What we've done is we've spoken to the banks. We've taken the A2 forms. We have pre-filled their forms. Those forms are also available on our platform. So let's say if your customer is banking with a Citibank or Deutsche Bank, again, you go to add money. You choose Citibank or Deutsche Bank, and the specific form which has to be completed will come up on the platform. That is already pre-filled with all the details from a beneficiary perspective. All the client needs to do is to print that form, put in their name and their account number with the bank, i.e. with Citibank or Deutsche Bank, and then send that to the bank, and the bank will transfer the money. So both offline and online transactions are possible.
Dipankar, if you can share the link also, wherein
Sure.
everyone can.
Sure, Kanak, yeah.
Yeah, and once people go to the website, they can actually see everything. I think just having a tour to the website and just going through the link, I think will be good, advisable to all of us. So if we have a look at that, I think that will be nice. And maybe Dipankar, you can share your number also with everyone.
Absolutely. So I've just shared the link. So you can click on this link. You can sign up for Empanel as an individual or as a company. And then I'll also put my number. If you have any queries regarding the empanelment process, setup process, or, product side, platform side, whatever, feel free to reach out to me. This is my number. I'll also put an email ID you can reach out to on. Yeah, this is the email ID you can reach out on. Any questions post the session, feel free to give me a call. More than happy to answer your queries, assist you. Any questions around setting up of the account, feel free to reach out. I'll help you set up the account.
There is a question from Ajay. What about the secrecy of data of client?
Yeah, so I'll take that up. While I do that, Dipankar, just check back on that email. I think the emails are doing fine now. So as far as secrecy of data of clients is concerned, I'll answer the question and let me just understand if I've got that right. So as far as the US side is concerned, meaning the data is covered by all privacy laws, on our platform as well. Whatever client data is there that is kept from a security perspective, the data is, it's AES level 3 encryption. All personal data is always encrypted on the platform. Then, of course, as far as your client data is concerned, that's visible only to you on the platform. And of course, on the US side, it's governed by US secrecy and privacy laws. Ajayji, okay, so like Motila, they start direct conversation, direct on more direct. Okay, so I mentioned this already at the start. The client, once they sign on the platform and they are linked to you, lifetime revenues of that client will come to you. There is no, a client cannot have a direct and a distributor account on our platform. We are designed to work with distributors. So you can be absolutely confident that any client you bring on that platform, that the lifetime revenues from that client are coming to you. We are not pushing any other model with the clients. Ajay, does that answer your question?
Yeah.
All right.
And can we see a demat account, how it looks like?
Sure. Dipankar, if you just bring up the demo again, show the client account.
Yes. Is it good to see the demo account? I just came to my mind
sure.
that if we
Sure.
really see, there is what all your wealth and all the securities are there. So it's like your bank passbook. So these days, no, even brokers go bankrupt. So what happens? No, whatever securities you have, everything is just gone in a flick of second. So it's very important that you have to understand a person who is keeping your stocks. And I think they are all good people and good place. Like in US also, do we have system just like India, like NSDL, CSDL?
So the US system is where the the custody is always maintained with US custodian. So like I said, in our case, it's Citibank and it's Velox Clearing. They are the custodians, and that's where the shares are kept in client accounts. The other interesting part of the US is, so on our platform, and actually on, that's again the way US prefers to work, is that let's say if I have Amazon shares today, I sell Amazon, the shares go out of my account and the cash I can see in my account right away. And I can buy Google or I can buy Facebook against that cash today itself. So it's instantaneous. The settlement cycle is still T+2 days over there as well. But the securities are held in street names, and therefore it's possible to then therefore do buy and sell on the same day as well.
That's good.
Let's just do a view portfolio.
Yeah, this is how it looks like, no? As we can see.
Yeah, so this is what the customer sees. They'll see the stock value, they'll see the cash value. So they have both the cash and the stock account in the same account with us. Just click through on the portfolio.
Portfolio, yeah.
So this is what the customer will see. They'll see portfolio value, they'll see total gains, they'll see a security level account, holdings, price, total cost.
Show the left side also. Achha, yeah, it's there. Okay, all the stocks are there, Alibaba to everything.
Correct. So let's just do a quick buy transaction from here. Let's just buy some Adobe stock. So let's say, you want to buy some Adobe stock, just put in the market order for, let's say, $1,000. So it's as simple as that, placing an order is as simple as that. you go into view orders. The market is shut at the moment.
Ajay, one more question which has come up, and that's related to taxation. Now, let's say if I buy a stock at, let's say, $1,000 and I sell it for $1,200. So do we, in India, obviously the equity long-term, short-term is there. But in India, I think all the stocks will be treated just like a debt fund. And is there also a taxation in the US market of whatever we are buying and selling here? So are we paying 2 times taxes, or it is only once in India?
There is a double taxation treaty between India and the US. On that basis, there is no tax deduction at source for capital gains in the US. When you sell something, just taking Kanakji's example, you sell something for $1,200, the entire $1,200 will come into your account. There's no deduction over there. When you file your tax returns in India, you will report that capital gain in India, and the tax on that will be as per your tax bracket. If it's short-term capital gain and if it's long-term capital gains, then after 2 years, it will be treated as long-term capital gains. You will get indexation benefits, and then the tax rate of 20% will apply. So no tax to be paid in the US, only tax to be paid in India, and as part of your normal tax returns.
So it's like the normal property tax. Debt fund is 3 years.
Debt fund is 3 years. It's more like
2 years. 2 years.
So it's 2 years. So it is the same as unlisted shares.
Unlisted shares, yeah.
Because the way the income tax looks at listed shares, they only consider shares which are listed in India. So any shares which are not listed in India, they treat as unlisted shares. So whether you have unlisted shares in India or you have listed or unlisted shares overseas, they treat it in the same way. So it's 2 years and 20% with indexation benefit.
Perfect. Good. Any further questions, friends? Otherwise, we are done for the day. Any closing remarks if you have to share, Mr. Nanda? It was really eye-opening session. A lot of new insights and understanding. I think this is a requirement for many of our HNI clients, especially those who want to buy a house or maybe have their kids studying outside. So I think opening an account like this is going to really work well. And you explained everything in a very beautiful way, or in a at your ease only. So I think this was very clear. So a lot of people in the chat box are writing interested to join. So I think we all can just click on that link and we can join right now also. Maybe immediately we can do that. So once this is done, then we can onboard some of our investors slowly and gradually. I think, and one more good part which I have understood from this Globalise platform is even a person can invest $100 only. Let's say if I want to invest $100, $200 only, I can start with that. It's not that there are some platforms which I know where the minimum requirement is like $10,000 or something like that. So if you, until and unless you have $10,000, you are not allowed to invest or you are not allowed to start. But here, the best part is you can buy anything and everything, whatever is available for maybe as low as $100. Am I right?
Absolutely. And, also as a partner, it's very straightforward to sign up. We will, the link is there. And maybe Kanakji, we can draft an email, then you can share that link via email with all the people on the call today. There is, there is zero effort required. And what I mean by that is, there's no technology work required on your side. The technology is already built. You click through, you sign up, and you have the account. There is no charge for any partner to open that account. And then in terms of the commission, I mentioned the commissions around the subscription fee and trading fees. And as you sign up, we can have that bilateral discussion around the AUM fees as well. We'll send you a fee schedule. There's a question from Vikas.
Yeah, nothing. ARN, I think, is not the requirement over here. This is not no requirement of ARN.
Yeah. So typically, what we have people on the platform are either RIAs or normally ARN holders. If one is not an ARN holder, we can, maybe also discuss that offline. Basically, I think because on the platform, you have access to client information and you are putting through client trades. We just want to make sure that there is a good process to do that. So, we can discuss that. So far, people we have on the platform are either RIAs or ARN holders. But if you're not an ARN holder, maybe we can discuss this offline. So that's as far as commission is concerned, account opening is concerned. We've covered
account opening fees you mentioned. Is it compulsory for everyone to pay that? You don't know, we have some 5,000 rupees, 2,500.
So 5,000 rupees, which is the annual subscription fees if a client wants to subscribe to a premium plan.
Okay.
Where that
Otherwise,
trading
it's
becomes
no cost.
free for them. Otherwise, there is no cost for the client to open the account. And then they can also trade on a normal basis.
This is an annual fees of 5,000 rupees.
It's an annual fees. We can very quickly, Dipankar, while I look at if there are any other questions, just show that from
if
the
they
website.
want to trade at zero brokerage.
That's right. That's right. That's right. We just show the pricing plan. So again, as Kanak said, there's a lot of information on the website, and we're also available if you have any specific questions. I will also put our website link on the chat so that those of you who are interested, you can click through and let me actually embed the link. Yeah, Dipankar, do you want to talk through the pricing while I embed the
Absolutely. Yeah. So there are two plans available. One is the base plan and one is the premium plan. Both the base plan and premium plan have zero account opening fee. In terms of subscription fee, base plan has 0 per year subscription fee. Premium plan has 4,999 per year subscription fee. In terms of base plan, the trading fees is $0.025 or 2.5 cents per share. In premium on buy and sell. On premium plan, this trading fees is waived off. As you can see, 0.00 per share. That's one. Second, in base plan, every time a customer invests into a model portfolio, there are two charges. One charge is the globe purchase charge, which is the upfront charge of 2.99 per globe purchase. Basically, this is so underlying in the globes are ETFs. This is to basically cover the the transaction cost, buy and sell cost, rebalancing cost. So every time a customer purchases a globe, there's a charge of $2.99 per globe. There is no charge on the premium plan. So this is the basic difference between the base plan and the premium plan. The AUM fees is charged on the globes on both the plans, the base plan and the premium plan, that is 1.25%. Of that, a certain major portion of that gets passed on to the partner. Any questions around pricing? So basically, premium plan, there's a one-time yearly fees of 5,000, yearly fees of 5,000 rupees. And once the customer pays that, he does not have to pay trading fees on buying or selling stocks or ETF. And, globe purchase fee of $3 also. There's a yearly fees of 5,000.
Perfect.
So I know we've overrun our time. Kanakji, should we bring this to a close if there are no more questions?
Yes. So since we have no other questions, but I think I will share the details so that all of them can register, and then one-on-one also they can get in touch.
Absolutely.
So thank you so much, Vikas ji and Dipankar. It was really nice, insightful, and I am sure this is going to help our investors in a lot of ways. So thank you for all the insights. Thank you for your presence. Thank you for the time, and thank you for sharing the precious knowledge. Thank you.
Thank you so much. Thank you for everybody for joining the session today. Hope the information shared is useful. To reiterate, the infrastructure via Globalise that you bring to your customers is exactly the same infrastructure which some of the banks in India are offering. Like I said, HDFC, Axis Bank have the same infrastructure. So it's a very secure, solid, tested infrastructure. And it's a fully regulated infrastructure. But here you have a platform which is designed specifically for you to help you. We've shared a lot of information today, but there's a lot of hand-holding which is required and which we offer as part of the journey, whether that is in terms of marketing support, that is in terms of hosting client webinars, that is in terms of providing research inputs for your specific HNI customers. So we're there available for any help or support you need.